10, yeah, 10 minutes ago. Go ahead.
All right, folks. Today is December 30th, 2019. One more day of December. One more day of 2019. I'm looking forward to the new year. I do believe there's going to be a lot of surprises in 2020. What you're looking at, you're looking at the markets live. They close in about an hour, but so far the Dow Jones is down 0.6%. S&P 500, Nasdaq are all down about 0.6%. Small caps are down about 0.3%. Earlier today, the Dow was down over 200 points, so probably another 60 points down. Tomorrow, I am expecting the markets to be down again tomorrow, probably the rest of the week, and then we'll take a look at it the beginning of next week. So for right now, we're still in 100% Putnam stable value because we had a very good idea the markets will be down today. No need in taking unnecessary losses if we don't have to. What we do calculated risk. So it looks like we're going to end the year up about almost 18%. Last year we finished up. Uh, I looked at it again. I keep saying 12%, but I think we finished up 10.25% last year. This year's 18%. So overall, it's about 28% in the last 2 years. Everybody else is probably averaging about a 15% return. Well, no, not averaging 15% return. Well, 15% over the 2 years. So about 7.5% to 10% return. We're averaging about a 14 to 15% return each year for the last 2 years. Everybody else is about 7.5 to 10%. So even though they beat us out this year, we're still ahead of them. So everybody who was laughing at the beginning of the year, keep on laughing until you look at your totals. Let's look at some charts. All right, folks, we'll start with the Dow Jones DJI. You see it's down a little bit for today. It hasn't quite hit the 20-day moving average, which is the green line. All right, folks. You see the Dow Jones is above its 20-day moving average, 50-day moving average, 100-day moving average. Uh, in the next few days, I'm expecting the chart to hit the 20-day moving average. I'm not really expecting it to hit the 50-day moving average, but I'm trying to see if it comes down, hits the 20-day moving average, which is the green line, the top line, and then bounce off of that and continue to go up. Now, remember, my buddy Gregory Manarino, he's saying if the Fed doesn't put more money into the system through the repo action, sometime in January, we might have a 10 to 15% correction. So I'm watching those moving averages very closely. The top one, which is the green one, is the 20-day moving average. Red one is the 50-day moving average. And the black line, which is the bottom line, is the 100-day moving average. If the price drops below the 20-day moving average, we'll see what it does to 50-day moving average. If it gets below that, most likely to hit the 100-day moving average. If it gets below that, it will hit the 200-day moving average, which that's not shown, but we'll worry about all that later. Let's look at the Qs. All right. Qs are down 0.7%. They do look very similar to the Dow Jones. We're waiting to see if the Qs come down and hit this 20-day moving average. If it gets below that, it'll hit the 50-day moving average. Below that, the 100-day moving average. Below that, the 200-day moving average. If it gets too far below the 200-day moving average, then we have to look at like the 200-week moving average to see if it goes down that far. Let's look at SPY, which is S&P 500. SPY looks very similar. Above its 20-day moving average, above its 50-day moving average, above its 100-day moving average. Let's look at IWM, which is small caps. So small caps is actually a little bit closer to its 20-day moving average than the rest of the charts. We'll wait and see if it hits that 20-day moving average, because if it gets below that, it'll hit the 50-day moving average, below that 100-day moving average, below that 200-day moving average if it keeps falling. But we're just on watch right now. Markets have been up for a while, so thanks for watching. Like, share, subscribe. Later.